Afternoon, and today I definitely want to see that FPI number. Not sure, but looking at the nature of this rally, because it's not a few, 4 or 5 Nifty stocks that are taking the index higher. Everything is up. IT, banks have been doing really well. Even Reliance, large parts of the market are moving higher today.
The top performing sector is the oil and gas index, and and what this is now doing is that we were talking about taking it day on day, but the fact is that even from a slightly larger degree time frame. So, for example, the correction, the market peaked out in late September, so the high in October, September last year. Even from that time frame, which is slightly longer, I think you can consider this as a bit of a breakout. So we are breaking out, and it's good to see that. The level we put out in the morning was 23,060. That is the first kind of resistance. That's comfortably taken out. So it's been rapid, right? Monday, 20-day went. Tuesday, you had the 40-day exponential average, which went. Yesterday, the market inched higher. And now we're actually looking at retracement levels. The next level is basically around 23,600, which is now we're starting, as I said, from the larger time frame, the high of September to the absolute low. The 38% retracement of that is about 23,600, and then we'll see if we're able to get to it in this current leg, then the 50, then the 61.8, etc. So, and gains are holding. And if anything, actually, if you just look at the Nifty intraday chart, gains picked up. Actually, things perked up exactly at about 1 o'clock, and the market started moving higher and took a leg up. For the week so far, Nifty's up 3.5%. The Nifty Bank is up 4%. All sectors in the green. Everything. Advance decline, of course, is a more reasonable 2:1 in favor of advances. So, a pretty good session, all told. Rima.
Well, higher now for the 4th day in a row, and the Nifty has surpassed 23,200 mark for the first time since the 13th of February. And from our early March lows, which is just sub about 21,967, the Nifty is now rallied close to about 5.5%. Now all eyes, and today, by the way, we've also crossed the 50-day moving average, which is close to about 23,000. It's the Nifty weekly expiry today. All sectors in the green, but the sectors which are leading from the front include IT, auto, oil and gas, many of the defense names. So if you pull up the Nifty gainers list, you would see a Titan, a Bharti Airtel, two-wheeler names like Bajaj Auto, Eicher Motors, oil marketing companies, BPCL, IT names across the board. Fed, saying that they will continue with the 2-rate cut is helping the sentiment on IT names. Banks have also advanced past the 50,000 mark. The Nifty banking index is today above the 50,000 level, and now the next level to watch will be the 200-day moving average on the Nifty bank, which is 50,950.
Absolutely, it's a really big wide movement, and I'm guessing there's a lot of shorts that have been covering, and we've seen that through the course of this week because the momentum has made the shorts run for cover. We saw that yesterday as well, coupled with the fact that today is anyway expiry, so perhaps the moves get a little more exaggerated and pronounced. On the mid-cap screen, there was a bit of a scare. Early in the morning, the index suddenly dipped into negative territory, but since then it's recovered. There you can see there was some volatility, but it has recovered. And again, there are plenty of stocks that are flying around on all sides of the spectrum, PSU, non-PSU, financials, etc. Just some examples. Let's talk about some of the big movers and shakers at this hour. Amber, for instance, 6.5% on the upside over here. KEC International, 8% on the higher side. Welspun Corp, 8%. So it's cutting across sectoral lines. These are well-tracked stocks, and they seem to be getting snapped up today. Lots of names. Spark, Sun Pharma Advanced Research, up 15% as we speak. There's also AstraZeneca. So a couple of these healthcare names are also doing really well. And the whole PSU momentum seems to be intact. GAIL, IOC, Aerocon, just some names. And obviously in the large cap screen, there's ONGC as well. Some of these names that are having a pretty good session, at least for the time being. The question is now, what should you do in the last hour? Market is in absolutely fine form. Let's get to Mitesh and get some advice going. Mitesh, good afternoon. Once again, it's bulls in control. It's been a great week so far. What would you do last hour?
Good afternoon, Survi. So, we maintained that 23,100, 150 was the near-term target and a positional target of 23,550, 600. I think Prashant was alluding to same levels. I think that's where there are retracement levels. That's where there are weekly moving averages which are modified. And I think very likely that, around those levels, you will see a serious correction. So, while after a 3-4 day kind of a rally, you might get an hourly, 2-hourly kind of a decline. But that candle give when the Nifty, gives off about 100, 150 points. but broadly the direction is on the upside and very likely that we should do about 23,550, 600 in the next few days. So in that sense, maintain a positive bias. On the stock side, I have a buy on Britannia, and after a long time, FMCG names on the list. So Britannia is a buy with a stop at 47.70. Look for target of 49.40. And CDSL, which has been a recommendation earlier as well, now is a fresh buy. Keep a stop below levels of around 11.50. Look for targets of 12.10.
Thank you, Mitesh, for that. So Nifty headed higher, 23,550, 23,600 is the level Mitesh is now eyeing. But let's talk about cables and wires under pressure today on the back of rising competition in the sector. Vinny is here with the details. Vinny, first the Birla Group with Ultratech Cement and now the Adani Group. No respite here.
Absolutely. So we're seeing increased competition coming in this cable and wire space. Now, Adani Enterprises has formed a JV for this cables and wires foray. Its subsidiary, 100% subsidiary, that's Kutch Copper Limited, has actually planned a 50-50 JV. This is with Parnita Ventures Private Limited, and this JV is going to be called Parnita Eco Cables Limited. This is the JV, and the details that we have so far is that they're going to be engaging in the business of manufacturing, marketing, distribution, buying and selling of metal products as well as cables and wire segment. Now, other than that, what we don't know the amount of investment that Adani Enterprise will be making. But previously, and in 2024, the company had said that it's Kutch Copper Limited, they will be investing $1.2 billion. This is going to be to set up a 1 million ton per annum copper plant, and this is going to be in Mundra, Gujarat. So this plant is still under construction. Is it going to be a part of this as well? And will the products be coming in from this side? What is going to be the benefit from this front? These details are still left, and this is something that everyone is watching out for in terms of clarity. Do not forget that, in Feb 2025, that's just a month ago, Ultratech Cement also announced its foray, like you were mentioning. So that is interesting because they have announced a capex plan of 1,800 crores capex in the next 2 years. So these two big entrants coming in into cables and wires has kept the peers a bit jittery and increase in terms of competition, and a bit of a pressure has come in on all these other peer companies, whether you look at a KEI or Finolex Cables, because of the entry of increased competition coming in here and a possible impact in terms of the EBITDA as well as return ratios for them as well.
Big fall. KEI Industries is down close to about 14%. We had this chat with DSP Mutual Fund's head of equities, Vineet Sambre, and he drew parallels with how the paint stocks reacted when the incumbents were hit by rising competition. Listen in to his comments.
When we go back in 2022, when Grasim made that announcement to get into the paints segment, actually we had seen the paints company for 6 months still doing well. Maybe it was because of the demand environment, and only after 1 or 2 years, it really struck that it's hitting up and it's going to be impacting their profitability. So we saw the reaction in the stock price maybe 2 or 3 years down the line, and the stocks I think corrected by 30-40%. And this playbook was available as the announcement happened in case of wires and cables. We saw that immediately the stock price actually reacted. So I would imagine that the business opportunity is going to be large.
Okay, so severe price damage on these stocks once again today. That was beneath earlier with the DSP view. We have Deven Choksi joining us on this leg of the show. Deven, good afternoon. Great to have you as always. Let's get your opinion. I mean, these cable and wire guys, once they got hit because Ultratech decided to enter, now Adanis are entering. At that time, what the companies told analysts was that there's not much reason to worry because scaling up in this business takes a lot of time. But the market clearly is worried. Your thoughts?
Yes, sir. Good afternoon. Well, as I see it, I think the Adani's larger play is basically integration from the base metal to the end product. And that's where I think their major amount of growth program appears to be. Now, given the fact that I think the entire cable and wire industry is a market capitalization in the listed market across all the companies, somewhere around 1,40,000 crores, out of which about half of it belongs to Polycab and rest of it I think belongs to rest of the others. Adanis have basically shown the appetite to I think do inorganic growth. So in my viewpoint, I think if they have to really integrate themselves with the back-end metal production along with I think the further production of cables and then the distribution in the marketplace, probably I think it is safe to assume that I think some of the companies which are prominently in place, I think could become the acquisition target. So today they may have reacted negatively, but going forward, I think keep an eye on them. They could possibly be the acquisition targets, I think, in the marketplace. And that's where I think the industry is going to play out well, as I see. Consolidation, of course, but at the same time, the bigger players entering into it could probably grow the size of the market faster than otherwise, as we assume.
Devin, would you buy any of the stocks today in anticipation that they will become future M&A candidates?
So Phenolics is one company which is available at a valuation which is quite compelling at this point of time. Given the kind of distribution reach they have created, given the brand they have, and the valuation at which they are putting currently is not far too expensive. So certainly, I think this company has had some amount of promoter-related issues, and because of that, I think they have not commanded higher valuation compared to others. But in my viewpoint, I think the business-wise, they probably, I think, remain relatively more formidable player if one wants to, I think, integrate or get into some kind of inorganic growth proposition with them.
Okay, all right, got it, Devin. Just wait on. We have more stocks and more things to discuss. Z is another stock that's been in focus today. CLSA is getting a little optimistic on Z, perhaps saying that the worst could be over. There could be some business improvement from here on. Let's go across to Vamakshi for more details. Vamakshi, fill us in.
Well, so we're not just a little optimistic, but a lot optimistic on ZA. That is because they've given a target price of almost 170 rupees per share, which is a significant upside as compared to the levels that the stock is currently trading at. They have an outperform rating on this counter. They say that the stock has slumped almost 55% since the deal with Sony was called off. And in fact, the stock as of now is trading at a rock bottom valuation. The PE is 8 times. So therefore, they say that the risk reward is highly favorable for Z. They believe advertising revenue growth will re-rate the stock. They also highlight that Z is India's #2 TV network and is also at the same time ramping up its OTT presence, that is the Z5 business. They believe that the margins have already widened by around 9 percentage points to around 16% in the quarter gone by, and they're expecting further improvement to come through. In fact, they're expecting the margins to reach the 22% mark by FY27. Now, assuming that ad revenue grows at almost 6%, they believe that the EBITDA as well as PAT could grow at a CAGR of almost 22 to 33% in FY26 and 27. As far as the valuations are concerned, Z's market cap to sales is at 1 times, which is coming in at a 60 to 80% discount as compared to the Reliance Disney JV as well as Sun TV. So therefore, they say that the risk reward is highly favorable, and that is the reason why they've gone ahead and given a very bullish call on Z, and resultantly the stock is surging higher.
Have there been any thoughts? Z, I think it's been a while, months maybe, since we've last discussed this one. But what do you make of it?
So Prashant, I think the re-rating is possible given the kind of a discounted valuation at which Z is quoting. But I look at this subject a little bit more differently now. The entire media entertainment business is no more a content play alone. From pure content play, I think it's more of a distribution play, and distribution on various platforms. Be it broadcasting platform or a streaming platform, I think you are required to have significantly large amount of presence of the customers in each and every product vertical or each and every program vertical that you may have. That is why clearly the Geo Star combination appears to be, I think, scoring significantly over combinations like Z. So in my viewpoint, I would think that Z probably will have to wait, though the re-rating cannot be ruled out in this kind of momentum. That is not ruled out, but at the same time, the fundamentals, I would think more confident about, I think, how the proposition is emerging for GeoStar as a combined entity.
Devin, did your team hear the Voltas analyst call? Stock is down close to about 1.5%. In a nutshell, the company did talk about focus on volumes, increasing their market share, regaining what they lost. But the street still seems to be a little concerned on the margin trajectory on account of higher competition, and therefore they may not be able to pass on higher raw material costs, etc. What was your key takeaway? Because the stock is down post the analyst call.
Yeah, I haven't had the chance to discuss with my analyst about the call, but I would understand that I think on one side, the demand scenario is emerging stronger. On the other side, I think it is not easily translating into the higher amount of margins for the company, though compared to third quarter, I believe that I think our team believes that the fourth quarter would be relatively better on margin front as well. But nobody has a complete handle on it as to how much it will be growth as far as growth is concerned. So maybe once I catch up with the team, probably I think we'll have get more insight about I think what has been discussed on the call.
MobiKwik, the stock has been all over. The listing price was about 440. Stock peaked at 698. Then subsequently, very recently, it fell to levels of about 231. In the last 2 days, there was this turbocharged rally in the stock. And today, again, the stock has fallen. So it's been all over, down from levels of 231 all the way up to 698, which was the recent peak. Your thoughts on MobiKwik?
Either it is a trader's delight or either trader's nightmare. I think I do not know where exactly I think one would stand in this kind of situation. Fundamentals don't change, and frankly, I think this kind of businesses would require significantly large amount of time to justify the valuation at which they are quoting. I'm not a firm believer of I think paying a high valuation, even though I think these businesses have the opportunity to grow at a better rate. But the fact remains that I think everything is priced in, and if you are paying a fancy price to this kind of a company, I think that could possibly create a higher amount of disturbance in the portfolio. So maybe I think I would skip the entire proposition. Though as a consumer, I think I would love to use some of the consumer tech companies, the platform companies. But as an investor, I would be extremely choosy about adding them into the portfolio.
One more stock. Let me throw a very similar name at you. I mean, it has really driven people up the wall, down the wall. That's this diamond certification company, Devin, the International Gemological Institute, right? IGI. And there's a wide debate out there about whether their business model itself is under question because now it's all about lab-grown diamonds, etc. Any thoughts if you've seen the business, if you've seen the stock?
Well, I think one will not write it off this particular entire subject of certification because there is a market for the natural diamonds where this certification business will continue. And a significantly large market is also emerging in the jewelry segment from the lab-grown diamond space. So certainly lab-grown diamond is more of a commodity kind of a product vis-a-vis I think the asset product that we would like to treat the natural diamond as. And that is where probably I think the certification theory does not hold any kind of a value. And given that kind of a situation in my viewpoint, I think probably if you are betting purely on the certification related income and the revenue per se, and I think asking that it should come from the lab grown, then probably I think I'm not a believer of that particular idea. I would think that I think over a period of time it will get more crystallized. But as of now, as we see, lab grown diamond probably is becoming more of a commoditized product activity vis-a-vis the asset activity in the natural diamond space.
All right, Devin, great catching up. Thank you very much for those insights. And we'll continue this at a later date. Well, the market is looking super strong, 1% higher on the Sensex. Nifty is up about 1%. And broader markets, of course, are doing well as well. We'll take a quick commercial break here. Some good news as we take that break. India's business news leaders now a click away, introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles, and financial world updates at your fingertips. Download the app, the CNBC-TV18 app, from the Apple Play Store or the Google Play Store. Just scan the QR code on your screen now. Well, the question is, are we, and it may seem strange that we're still maybe prefacing the questions by this thought whether we are out of the woods finally. I mean, we're about 1,500 points, maybe more, from the lows that we saw, the absolute lows that we saw. But I said this yesterday as well, there are still people, and absolutely reasonable people, who would be wondering whether this is it, or there is one more kind of it's going to be painful, and whether this is just one of those bounces, a steep one at that, but that's about it. Let's put this to Tushar Pradhan, who's with us, director at Hexagon Partners. Tushar, good to have you with us here. Good afternoon. What do you think, Tushar?
Well, that's a tough one, because generally at the start of the year, we agreed that this was going to be a difficult year, simply for the fact that there were too many international events. There was overvaluation in domestic markets. There was pressure on earnings, which all indicated that the market was not going to be a smooth ride. And it kind of proved itself, because February was especially brutal, but it began probably September onwards last year. I would think that there has been some correction in terms of valuations from where they were. And practically, if you look at a 1 year rolling behind you, most of the gains which were there at the start of the year, last calendar year, they've all gone, they've disappeared. So we are practically back to where we were probably by February of 2024. Now, that's saying a lot, but which means that if we were to say that the market should take some speed from here, I think there are two things we should focus on. One is the continued momentum in earnings growth, which again, March being a very, very crucial quarter, we should get some benefit of. Second is the kind of selling that we've seen from the FPIs for so long. I don't think that is going to be a perpetual case, which means that the turnaround whenever it happens. And many times in markets, all of these things come at one time. So as all of the other negatives came at one time, I think the positives could also come back at the same time. And I think we might also see a bounce back. I have a strong feeling that as we began the year on a very bad or a bearish note, I think we'll end the year on a very different note. That is my call.
Do you want to hazard a guess how we'll end the year, Tushar? Different means what?
Different means then definitely better than where we are today. Because we began the year with looking at, as I said, a host of negatives, including the fact that maybe earnings were not really that strong as well. But I think the FY25 picture, having now gone behind us, we are talking about FY26 as the current year in a few days from now, and FY27 becomes 1 year forward. And I think that is something which is very, very strong from my perspective in terms of earnings numbers, and the EPS number can really be a big surprise on the upside. So all of those will get, kind of somehow discounted in the price somewhere during the end of this year. And that's why I'm saying probably by the end of the year, we'll be in a much better space than where we are.
You think we can get back to our all-time high levels?
To history, that has always been the case. So that's a safe yes, but maybe not within the year. But why not? I mean, if the earnings surprises come strong by the second quarter of the next year, I think we can see something like this by December. So I'm pretty happy about that.
A quick word on wires and cables. Increasing competition, stocks are getting derated. At Hexagon Partners, how have you read the entry of two large players in this particular segment? Did you all own it in any of your portfolios?
No, I thought it was one of the sectors that I think we missed out on, but we were happy that we weren't part of it, simply for the fact that when we were aware of what was happening in the cables business, the multiples of most of the businesses were at a level where I could not understand why they would trade at those levels. Because at the end of the day, it is a commodity which is very accessible and very easily available. So why would companies actually continue to trade at these levels? And that is more or less justified when you have some strong competition coming into the market. You will just destroy the valuation, because now you have a plethora of suppliers as opposed to earlier there were maybe a 4 or a 5 member set. Having said that, I think if the earnings continues to grow, it will have to now grow for more players than before, which becomes very challenging as a sector. And especially of a sector where the barriers to entry might be slow or low, sorry. it doesn't really, make sense to kind of hold them. At that time, at least that's when we thought. And even now, after the big, drop in valuations, which is almost halved, the valuations still are not really at the place where I would place a manufacturing unit like that at. So we're happy to, not own them. And I think something similar to what happens in the paints business is something that we are seeing here in a much more dramatic fashion. But that's what competition does to all.
Yeah, I know. It's for the market. It's like once bitten, twice shy, right? We've seen the pain in the paints segment and still not recovered. I mean, still waiting for things to really meaningfully improve, and therefore the fear around wires and cables. Take that point. Tushar, just give us 1 minute. There's a important and interesting story that's come in on X. We'll just address it and then get back to that conversation with Tushar Pradhan. Now, this is regards to a petition that has been filed in the Karnataka High Court. X has contested the government's takedown directives issued under Section 79 of the IT Act. We have Ashmit joining in with the details. Ashmit, so what exactly is X contesting here?
Well, the Elon Musk-owned X is up in arms, especially when it comes to the takedown powers of the centre. Bear in mind that the centre has been issuing takedowns under the IT Act, under the IT rules. And to be specific, the power that they cited is under Section 79. Now, what does that mean? Under Section 79, the government can suspend the safe harbour protection that social media companies like X have. And it is under the threat of that removal of safe harbour protection that takedown threats have been issued. That is what X has appealed against before the Karnataka High Court. X has essentially challenged the use of this power, saying that this is unconstitutional, this is illegal, and this is arbitrary. X's petition before the Karnataka High Court, in fact, goes on to call out, to flag concerns with respect to legality of the Sahyog portal. This Sahyog portal was introduced by the Government of India to allow for smoother transitioning and communication of takedown orders to social media entities. That is what X is up against, saying that we don't want to be a part of that. Also, in fact, X in its petition very clearly points out that this trend of issuing takedown orders is in clear violation of a 2015 Supreme Court judgment. In that Supreme Court judgment, it was very clearly pointed out, it was very clearly directed that any and all takedown orders will be as per Section 69 of the IT Act. And the Section 69 is relevant because it prescribes various procedures and safeguards that need to be followed when issuing these takedown orders. And that is what X is flagging, saying that these takedown orders are not only non-compliant with the Supreme Court judgment, also non-compliant as far as these provisions of Section 69 are concerned. And with that, asking for release from the Karnataka High Court. And also, let me also take this moment to, in fact, draw in a caveat here. Important to point out that this is unrelated to the Grok issue. That is an independent inquiry that the centre has initiated, where it's looking to seek answers as to why Grok is generating the kind of unhinged responses that it is. This is independent of that. These are two independent issues. But nonetheless, on the issue of takedown orders, X knocking on the doors of the Karnataka High Court.
All right, unhinged responses. Ashman, thank you very much for that. That is, our colleague Sante has put together, she asked, just to kind of figure out, because over the weekend, I think this was a big thing. There was lots of this stuff being posted on social media, and people were asking Grok stuff and putting out stuff. Sante has asked her own questions. And I think she's going to be putting that piece out on at least social media a little later. So.
Do you remember any answers?
I have a few, but I can't. We'll wait for the stuff to go out. But incredible. You got all these tools now, which can really, speeds up things.
Absolutely.
You got ChatGPT, Perplexity, starting to be widely used now. Of course, now you got Grok as well out there. Tushar, so your view is positive, and to the question of whether all-time high by the end of the year, why not, right? So what will lead the market there? What are you most bullish about?
I think clearly, I think the ones which have been laggards so far, which is the financials, and which are key in terms of where the economic growth will come from. I think those are the ones which will lead, because if they start to move, which they haven't for a long time, then you will get a very significant momentum in index movement. And I think that's really where it will come from. Because otherwise, your mid and small cap companies are not going to do much heavy lifting as long as the index as far as the index is concerned. So which means that you need the heavyweights to move. And I think that is really where the confidence comes from, because the heavyweights have not moved at all. Whether you take any of the biggies, especially now that the IT pack took a big severe beating some time back, they've come back a little bit. You've seen the financials also, they've taken a big hit. They are trying to come back. If you take absolute valuations, I think they are now significantly lower than the longer term averages at what they've traded at. And I think even if they go back to the longer term averages, you get a significant move in the market. So that's really where the confidence comes from at a top market down level.
Okay. Tushar, we were just talking about wires and cables earlier, and you were obviously cautious in that space for reasons that you explained. I want to just talk about the other sector. Typically, these are themes that start working when it's the season, literally, summer. So I'm talking about some of the consumer durable players, room air conditioners, etc. Beyond just playing that theme for the next couple of weeks, do you see some merit here, reasonable growth, valuations, etc.? How's the overall, consumer durable segment looking?
No, as I said, I think we are actually quite constructive on this space for two reasons. One is that there has been a significant move to increase consumption levels in this country. And if you remember, already, of course, the budget is a forgotten subject. But all of the kind of benefit that a large section of India's population is going to get from absolutely zero tax on their income now, which are a large number of filers, have to find, some place for this discretionary income to go to. And what better than a summer season to, install a new AC or, get yourself a purifier or whatever that means. I think this is something which is going to be I would say, a multiplier effect, where you have regulations going in your way, you have significant discretionary income, and the fact that seasonality, etc., is lending you to push in a certain way. And as I said earlier, also these impacts could be longer term in nature, and I think there might be a significant improvement in terms of the demand situation as we go into the summer and beyond. So I think this is a space which is something to watch out for.
All right, Tushar, thank you very much for joining us. Appreciated your thoughts and insights here on CNBC TV18. We'll take a quick commercial break here with news that the market's up 280 points. Nifty Bank is up 0.75%, and market breadth holding very, very strong. Take a break. See you on the other side.
Welcome back. Here with us on Closing Bell. Defense stocks obviously have been on a bit of a tear. Yesterday, they were all surging up and about quite a bit. Now, sources are telling us that the Defense Acquisition Council is all set to meet today. The Cabinet Committee on Security has also cleared a 7,000 crore rupee purchase of artillery systems manufactured by Bharat Forge, which explains some of the excitement around that stock. It's up about 5% as we speak. We have Parikshit joining in with more details. Parikshit, defense stocks definitely all powered up and charged up. Tell us more.
Well, definitely. And this is one of the biggest Make in India orders in the defense sector that is going to the private companies in the recent past. As you rightly said, this is a 7,000 crore order. The total number of howitzer guns that are being acquired through this program is around 307. They will be used to equip 15 artillery regiments of the Indian Army. So these are Indian-made howitzers, a 52 caliber, 40 kilometers of range, which is one of the highest in the world for such weapon systems. Because 60 or 65% of the components are locally sourced, the self-reliance will be very high and Indian Army will be able to maintain them very easily as well. 60% of this order is going to Bharat Forge and 40% to Tata Advanced Systems Limited. We've been told that the deliveries will begin in the second year of the order and have to be completed within 5 years. That's not all. A major Defense Acquisition Council meeting is going to take place and they will be clearing an acquisition of BrahMos cruise missiles for both the Army and Air Force. This is going to be a big order. At the same time, DAC is considering the acquisition of 400 Astra air-to-air missiles, the acquisition of 60 indigenously developed Varunastra torpedoes for the Indian Navy is also on the cards, and Bharat Dynamics is the manufacturer for this Varunastra torpedo. And the government overall has been working to speed up timelines for acquisition of critical defense systems, arms, ammunition, and missiles for all the three forces.
All right. So defense very much in focus. Yesterday there were the shipbuilders and today you've got the others which are starting to move as well. Parikshit, thank you very much for that. Well, Mitesh is back with us with fresh trades, short term though, what to buy or sell today for reverse trades tomorrow. Mitesh, what do you have?
So, Prashant, I think, despite the fact that the markets now on the hourly charts are getting close to slightly over what levels will maintain a long stance, given the fact that there's no sign of apparent profit booking or weaknesses yet. On the stock side, I would take a BTST on Dr. Reddy's. I think that's a stock which has moved well in the last 2-3 days and is showing good potential. So buy here or BTST here with the stop at 1175 and look for a target of around 1210 for tomorrow. And the other one is Gas Authority of India Limited. That's GAIL, just at the averages. So actually, this can be, once it crosses today's high of 169.5. So buy here with the stop once it crosses 169.5, then take a stop at about 166 and look for a target of 175, more of a short-term trading call.
Dr. Reddy's and GAIL. Thanks, Mitesh, for that. Let's turn our attention now to the insurance sector, which has seen a flurry of activity this week. A total of 5 major deals were either announced or finalized, making it one of the most eventful weeks for the industry. Yash is here with the details.
Well, Reema, just going by the numbers of transactions which have been announced in India's insurance sector, it clearly has been the most eventful week in the life of, Indian insurance sector. In the last 7 days itself, a total of 5 large deals have been either announced or they've been consummated. Let's go by the date. On March 13th, Baba Ramdev's Patanjali Ayurved, along with the Dharampal Satyapal or the DS Group, announced acquisition of about 98% stake in Magma General Insurance, valuing the company at 4,500 crore rupees. Adar Poonawalla will be selling nearly 75% stake in Magma General Insurance to Patanjali Ayurved. Also, Patanjali Ayurved will have about 74% stake in the company. They will pay about 3,330 crore rupees, and the DS Group will own about 24.5% stake for about 1,100 crore rupees. The next announcement came on March 17th. Bajaj Finserv and its promoter companies announcing acquisition of 26% stake held by Allianz in both life and general insurance joint ventures. Bajaj Finserv and its promoter companies will be paying about 13,780 crore rupees for a 26% stake in Bajaj Allianz General, valuing the company at 53,000 crore rupees. The deal being done at about 4.9 times FY24 price to book value and 2.6 times times FY24 price to GDPI. Also, Bajaj Finserv and its promoter companies will pay about 10,400 crore for a 26% stake in the life insurance entity, valuing that company at about 40,000 crore rupees. This deal being done at about 1.84 times price to embedded value on a FY24 or a trailing basis. Now, who will acquire how much of Allianz's 26% stake? The first listed company, that will be Bajaj Investment, that will be acquiring about 19.95% stake, Bajaj Finserv about 1.01% stake, and Jamnalal Sons about 5.04% stake. On the very next day after this, which was March 18, came the next announcement. Hinduja-backed IIHL announced completion of acquisition of Reliance Capital. Through this, Hinduja Group will own 100% in Reliance General Insurance and 51% in Reliance Nippon Life Insurance. Hinduja Group will also consider listing of the two insurance entities in a period of about 2 to 3 years. On the same day, that was March 18th, LIC CEO told CNBC-TV18 that LIC will announce an acquisition of a health insurance company. As per LIC, the talks are at an advanced stage and LIC will look to acquire not a majority but a significant stake in the company. Reports suggest that LIC could be looking at Manipal Cigna Health Insurance for the stake acquisition. As far as the final deal is concerned, that of course came today, March 20th, where about Prudential PLC, which is present in the asset management as well as the life insurance industry in India, has said that they will be forming a joint venture along with HCL Group, Shiv Nadar's HCL Group, to enter the health insurance industry in India. Prudential PLC will be holding about 70% stake in this health insurance venture, and Vama Sundari, which is essentially the parent company or the promoter company of HCL Group, will be holding about 30% stake. So 5 large deals in just about 7 days. Still Friday remaining. God knows what's in store for that one.
God knows. Yes, thanks very much for that. So, well, there are lots of deals, lots of insurers. And of course, I mean, this is insurance, but take a look at what's happening in, sector after sector. Newer entrants, increased competition in a lot of areas. Cables and wires, of course, we highlighted. There is insurance and many others that we've told you about. Paints is another sector. And so on and so forth. Well, we'll slip into a quick commercial break here. We're going to come back with snippets of our conversation with Rajiv Thakkar, the CIO and Director of PPFAS Mutual Fund. We spoke with him about what he likes, what the fund house is buying at this point. Stay tuned.
In terms of the valuation parameters, although we are better valued now than we were, let's say, 3-4 months back, but are we at cheap valuation levels? Answer is no. Is there still froth in large pockets of the market? I think the answer would be yes. So bottoming out will happen, I think, stock by stock and sector by sector rather than the overall market bottoming out. So you could have this strange situation where some stocks look attractive and people will start buying them and they could stabilize or start moving up. At the same time, segments which are very, very frothy could see a sustained price correction over a point of time. The buying has been in spaces where we already own positions. So for a long time, we have been liking the banking and financial services names. So we have been owning 4 private sector banks, and those have been things that we have been buying. We have been, as would be seen from our February portfolio disclosures, we have added positions in some of the auto names that we have, or the public sector companies that we own, or in the pharma companies that we own. Largely, it's been the same names. In December and Jan, we added a couple of new names to the portfolio, but those are the places where we have been deploying. A lot of this, I think, is posturing, trying to get other people to balance their economies. So you spoke about China. The measures in China are to increase domestic consumption and domestic economy rather than just depending on exports. So Mr. Trump is right in that sense that US cannot be a trade deficit company forever for very, very large amounts, and ultimately some rebalancing has to happen, and that will happen. But let's say even if tariffs are brought down on something like a Tesla, will it change the auto market domestically very, very dramatically? Unlikely, because they operate in a very, very high price segment. So adjustments will happen. Will it be a very different morning on 2nd of April? I have my doubts. I think more or less it will be business as usual.
Welcome back. A little more than 5 minutes left to close what's been a solid session for our markets. Good Thursday. The Nifty up 280 points, not perhaps closing at the day's high, so not above 23,200, just shy of that. But fourth day running that markets have clocked in gains, and in the last 4 days, we've covered considerable ground. Bharti Airtel, Titan, Britannia, Bajaj Auto, BEL, BPCL. So the gainers are cutting across sectors. Mayuresh Joshi, head of equity research at William O'Neill, is now with us on the show. Mayuresh, do you think there is still skepticism about this rally that we're seeing? Will it falter at higher levels, or do you think it has more legs to go?
Afternoon, Rima. I think there is still belief that the markets might actually go down. And that's because of the kind of selling pressures that we've seen over the last few months. And obviously, I think the macro conditions, which have not changed much over the last few weeks as well. So again, I think there is some bit of skepticism that still exists in the market. But in our opinion, as we've seen in the past as well, and the report that we carried a few weeks back, I think there were a lot of indicators that were pointing out that a large part of the price damage has been done by the market. Earnestly, nobody was expecting a 1,200-point rally to probably come through, in my opinion. Yes, there were shorts in the system, Rima. But again, I think this rally has been phenomenal over the past few days. Whether this persists or not over the next few weeks, I think we'll come to know. But again, I think you have to be a little bit more sector and stock specific in these markets.
Okay, fair enough. So let's talk about those specific stocks and sectors where you're seeing opportunity. Mayuresh, hi, good afternoon. So, I mean, the broader mid-cap market seems to be getting some sort of its mojo back. Here, let's talk about some pockets. Defense got very excited. Our colleagues just told us that there is a Defense Acquisition Council meeting as well today. Would you buy anything in defense?
Afternoon, Surabhi. No, again, I think the big picture stays with defense because most companies are loaded with order books over the next 6 to 7 years. So I think the revenue visibility obviously persists for that periodicity of time. The orders have come with decent margins as well. And therefore, I think as they execute well, you're probably going to see the net results in terms of operating leverage, better EBITDA performance, and better absolute bottom line numbers probably come through. Obviously, the sector and the stocks within those sectors had moved a tad bit too much for comfort over the last few months and last few quarters as well. And obviously, the correction that you probably saw in the markets, defense stocks got beaten down the most. Obviously, a few stocks within the space would be execution was not at par, and therefore analyst expectations and what they delivered in terms of earnings were a little bit of a mismatch. But in our own sense, again, I think the big picture argument stays with defense, the ratings and rankings as we see it in markets with India, and a lot of parameters that we look at from a cancelling perspective. I think the space probably looks good. Bharat Electronics is something that you should have your own watch list if you don't. The shipbuilders apparently also have done phenomenally well over the past few days. But here again, I think the rating rankings look very, very superior. So something like a Cochin or a Mazda might actually carry on their momentum as well.
The capital market plays, Mayuresh. Novama, for example, is making a bit of a comeback.
Afternoon, Prashant. I think within the space, again, I think asset managers is something that that looks decently poised. And therefore, I think you're probably looking at the construct in terms of the asset ownership as far as equities is concerned. It's very minuscule compared to the global and the emerging market average as well. The SIPs that are expected to continue, the expectations in terms of number of households, the ultra HNI households, which might actually double from 8 lakh to 16 odd lakh over the next 2 to 3 years, will need financial advice in some form or the other. And therefore, I think asset allocation for these households itself is going to be a very key criteria for the next few quarters and years, and the help of professional asset managers as well. So absolutely. I think asset managers is something that is showing up on our screeners and filters that can probably do well with the capital market.
Okay, but I mean here the asset managers maybe are going to be in focus as well. By the way, you looked at this. Something is happening in Kaveri Seeds, Mayuresh?
No,
I mean yeah. Sorry, go on.
No, did not have a look at that, Prashant. So sorry for that. But again, I think the expectations in terms of La Nina conditions actually evolving. I think I read a couple of more reports which are probably indicating to that. I read an Australian agency report as well, which bodes well for the rural sector as a whole. You've obviously seen a good Rabi output, a harvest and an output expected as well. And therefore, with La Nina conditions evolving, Kharif season might be equally good, followed by an equally good Rabi season as well. And therefore, I think all these rural players, seed companies, fertilizer companies, agrochemical companies, tractors, might actually remain in focus. Because if the rural economy comes back strongly, I think the proxy to all of them might actually start doing well in terms of reported numbers. So,
quick word on Z. CLSE believes the stock could double in the next 12 to 24 months. Valuations at rock bottom, 8 times PE.
Beaten down, bouncing back, but I think it's all about numbers, Rima.
So wait and watch.
Oh, absolutely.
For the numbers to play out.
Wellspun Corp, any thoughts here? The pipe maker, Mayuresh?
Remain extremely positive. Prashant, as a clear disclaimer, I think we've added that stock to our portfolios just today. And therefore, I think the kind of dominance that Welspun has, one of the 3 large global line diameter pipe makers in the world, there is a huge scope as far as the capex is concerned, both from the domestic side, where there is expectations of 11,000 odd kilometers expected to be put in terms of city gas, in terms of sewerage pipes as well. And as well as Saudi Arabia and US, where they're having a huge capex probably done because of the orders and the expectations in terms of the spending that will come through from their economies as well. So numbers holding up, more than 50,000 crores worth of order book, and operating leverage and ratings and rankings look absolutely fab. So again, biased here, and then we continue holding this stocks.
All right. Okay, Mayuresh, we will just take a breather for a second. Let's quickly recap today's close, and then we'll come back for more questions. It's been a good day. Not quite at the highest point of the day, but nonetheless, with a 260-point move, the bulls will take it with both hands. 23,200 may have to wait for another day, but otherwise, it's been a big up move. I mean, let's talk about the Nifty movers. It's a big Nifty day, actually, even better than the Midcap index. Bharti Airtel, 4%. Titan, almost 4%. There's Bajaj Auto, 2.5%. Britannia, Eicher Motors. You've got names like HUL. Overall, consumer stocks have had a decent session today. Tata Consumer. Beyond that, auto has also been a very solid spot. Eicher Motors, Bajaj I mentioned. There's M&M that's seen buying. Hero Moto also on the upside, so looking good out there. Then a lot of the large cap names have contributed very well. TCS, finally tech stocks stopped falling after the drubbing they got earlier this week. TCS up about 1.5%. There are names like Reliance that have done really well today. And financials continue to chug along. HDFC Bank, for instance, up over 1.5% in today's trading action. Actually, everything in the market was fine. Bajaj Finance took a bit of a break, slightly lower. IndusInd Bank fell. But apart from these 2 or 3 stocks, practically everything on the Nifty in the green today.